Let's talk to Clive Lambert. He is a director at FuturesTechs. Very good morning to you, young Clive.
Hello, Nick. Always a pleasure. How are you?
Living the dream. Right, 4 thought-provoking charts to go through, whiz through. Let's kick off with the dollar index, the daily charts. This looks quite bullish, doesn't it?
Yes, okay, let's try and be thought-provoking. Right, yes, we broke above 91 for the dollar index, and that is a bullish signal because it's a Fibonacci level where we failed in, I think it was in February, and then we came back, we made a higher low, another higher low, and now we've broken above that 91 level, and yes, as you say, that looks rather bullish. 92.40 is our next target, and if we can get above there, Mr. Fibonacci says that 94.10.20 is the next level above that, and it's all looking rather perky.
Okay, so we like the dollar index. Let's move on to cable, the Great British Pound against the US dollar, daily chart. A failure at a new high.
It was indeed, yeah, absolutely. You've got that nailed on, dear sir. We topped out at 143.50 in January. We revisited 143.50 and got up to 143.77 last week, and then we fell over, and we've been selling off ever since, and we broke that short-term uptrend line, and now we're testing the first Fibonacci level at 138.66. Below that we have an uptrend line and the low between those two highs. They're both coming together around 137.10 to 137.30. So that is the next key battleground for this particular one. And as you all know, because you are an avid chartist, if we break 137.12, which is the precise, the actual low between those two highs, what do we get, Nick? Come on.
We get another sell signal.
Get a double top sell signal, indeed.
Okay, so we don't like that chart. Let's move on to the S&P500. I saw the headline, this 200-day moving average, a bellwether for fund managers. We're clinging on to it for dear life, aren't we?
Yeah, okay. Well, you've said everything I was going to say. It is rather, it's amazing how well this is holding. We had that massive sell-off in February, and it bounced very neatly twice when it hit the 200-day moving average. Got back 78.6% of that whole move and then fell over again. Came back to the 200-day moving average. We closed below it one day on the 2nd, I've written it down, the 2nd of April.
Right.
And then the next day, retook it. This week, we've come back again. We've retested it. It's at 20 there. Get me big figure right. It's at 26.11 today, and we're holding it. And as you say, it does seem to be some sort of bellwether for fund managers and for the entire world. I mean, you know, I'm not a massive fan of the 200-day moving average. Just something to hang your hat on. But when you see this sort of price action and you see it continually defended like it is, you can't, you know, you have to take notice.
Yep. What I would just add to that is if you look at the previous trend, it's really quite smooth, higher highs, higher lows. And since this February price action, you've got inconsistency, you know, and often that's the first sign that this is turning over. So that's my thought.
Yes, exactly. Volatility is most definitely back in the room. And what do you get at major tops? You get volatility.
Exactly.
So I think that's the bigger picture warning that this chart is maybe screaming at us.
Understood. Let's wrap up with the DAX. What's going on the DAX?
Well, again, I've got a green line on the chart, which is the 200-day moving average.
Okay.
And that was doing a great job of support for a number of months, years, right up until February when it broke and we got, you know, and then it just continued to go lower. What have we done? What are we doing right now? We're back and we're retesting it and we're failing at it. And it's at 12,650, and that's been the recent highs. We're looking at the futures here, and so, you know, but then on Wednesday, we saw some downside rejection. We saw some buyers stepping in again. So we've got a key area of support, 12,290 to 12,320. And, you know, that's something for the bulls in the short term, but they have a worry if you're bullish of the DAX, because this 12,650 50 area is capping things, and that's where that 200-day moving average sits. And so again, the 200-day moving average is doing a great job in this one, but actually this it's the flip side of the coin is what's happening in the S&P.
Right.
It's doing resistance in the DAX.
Maybe a pairs trade for consideration. Clive, on that note, thank you very much indeed for your time. That's Clive
Okay.
Lambert from FuturesTechs.